A person who never made a mistake, never tried anything new. Albert Einstein. My friends, get into charting. 10 to 15 minutes a day, that's all we ask. What could be more important for your future than being able to read stock charts and know which way the market is going with your favorite ETF, your favorite stock? Again, there are caveats here. They have to be chartable, and you learn how to do that with backtracking. I'm going to put that backtracking training at the end of today's video. For those of you who are subscribers, and you can subscribe for free at chartingwealth.com, we have a great video for you today. Market timing doesn't work. Oh, really? We debunk this idea that you can't track the market, that you can't follow trends. Of course you can. Any of you spend any time with us, you know we do that day in and day out. So, backtracking is going to be the special training into today's video. For all the subscribers, we have a special training for you on market timing. Let's jump into these charts. Everything up for the day. And of course, Bitcoin, which we have been tracking at your request here lately, is up the absolute most, 14.65%. Where is the check this out. Where is the candle ending? Right there at the $41,000 mark. Now, of course, it closed today at 43,786, but isn't it fascinating to see where that candle peaked? Now, these are Heikin Ashi candlesticks. They're actually put together differently than the high open, low close, but we see we had previously set this, and it's interesting to see the candle driven right up to there. We were already positive on that weekly chart. We go to the 2-day, and it's edging closer and closer and closer to crossing over. Will it be another, excuse me, up day tomorrow? And will we have a 2-day recross that will allow us to comfortably get into a practice trade on Bitcoin? Or will it pull back? We don't know that yet. We're going to wait and see. We can see how things edged up to the $41,000 mark and then over in the afternoon on that half-day chart. But what we're really paying attention to is whether we're going to have a 2-day recross or not. That last 2-day recross was beautiful for us. So again, we'll watch, see what there is to see there, or see if it's just bounding up there and is going to roll back over, just going to test that line and pull back. We don't know yet. Remember, this latest candle on the 2-day chart is halfway through. So it will finish drawing at the close of the day on Monday. So be ready for your practice trade if there is a crossover. If there's not on the price percent oscillator, then we're going to keep the powder dry and wait for that time to come. So again, watch, pay attention, follow the rules, and let's see if we can get a successful practice trade going here. Although we do see some bounding up to that line, and we're going to need to see that 2-day recross. Okay, we started something we really never do. We started with a different chart than the S&P. So we finished Bitcoin. Let's go to the other important charts. What's up with the S&P? Up for the day, 0.72%. Weekly vertical crossover this last Friday after a recent crossover going down that only lasted for a week. But of course, that 2-day was weird in that it had not crossed over going up. We see the derivative oscillator still losing momentum. Price percent oscillator, again, barely heading up. First day of a weekly candle. Look at this 2-day chart. It may very well, at the end of the day on Tuesday, finally cross over. Could that be a jumping in point for you for a 2-day recross? It could be. And let's see just what we see happen there. If we see the S&P roll back over, or if we see things continue to move up. That's where we are. Derivative oscillator still negative on that 2-day chart. Maybe it will turn green tomorrow. Forgive me, I'm sorry I'm having so much of a hard time with my lungs. Those of you who know me know I have a long-standing lung issue. And thank you for putting up with my coughing and sputtering. I do apologize for it. Let's look at the half-day chart. We see things up in the morning, a little higher in the afternoon, moving right up that 4-hour trend line. Derivative oscillator peaked back on the morning of Friday and is still losing momentum, but that price percent oscillator just jamming up. That's where we are on the S&P. What about the NASDAQ 100? It crossed over going up on Friday. It had already had the 2-day crossover going up back a few days before. Derivative oscillator nonetheless still losing some momentum, just a little bit, but that price percent oscillator slowly pulling away from the red signal line. 2-day chart, same thing's happening. Derivative oscillator, however, is gaining some momentum. Price percent oscillator is pulling away. First day of this latest candle heading up quite nicely on a nice trend line connecting 3 candles so far. Price above the weekly, so that's looking beautiful. We look at the half day. We can see things up in the morning, not quite as, didn't reach the peak, I don't believe, in the afternoon. The high, 133.74, and in the afternoon, 133.60, so not quite. But again, moving up, and we will continue to keep an eye on things and see where they go. But again, moving up nicely after that weekly vertical crossover, just the first day of a 5-day candle. So we're not writing anything into the history yet. What about bonds? Well, bonds are up some for the day, 0.44%, our smallest up for the day with everything up. Bonds, though, as you can see, we still have a red down candle forming. That is, again, the Heikin Ashi candlestick. See the derivative oscillator gaining momentum, price percent oscillator still heading down, so the average pace still going down. 2-day chart, you can see it's not reached the low that it did previously. Price percent oscillator flattening a little bit, derivative oscillator still heading down, price still below the weekly and the 2-day. We look at the half-day chart, and that's where you see it being pierced. Not in the morning, but in the afternoon. Flat on the price percent oscillator, derivative oscillator, losing momentum. It peaked going down on Friday. So again, we'll keep our eye on bonds. Things are still, again, still moving in the right direction. We'll just see how the week continues to develop. We're paying, of course, most particular attention to the weekly and the 2-day. So that's where we are on bonds, still going with that weekly vertical crossover. Well, actually, the most latest move is, of course, in the 2-day. That old weekly vertical crossover happened all the way back in May. Our longest weekly vertical crossover in our 4 charts. Now we go to gold. Well, I say that. Let's check. Yes, gold happened back in September on Friday, September the 11th. That's when we had the crossover in gold. And what do we see happening there? Well, gold was up for the day, 1.10%. We see, though, a red down candle forming for the week, not reaching anywhere near that prior low. Prices below the weekly trend line. We have a decent weekly trend line connecting 3 candles so far. Derivative oscillator gaining downward momentum. Price percent oscillator still heading down a little bit. 2-day going flatter with a green candle forming. And again, we'll pay attention to that. Green up candle. Now, of course, we can see that it hasn't made up for that prior 2-day loss in any way yet. But price percent oscillator flattening, derivative oscillator losing downward momentum. Half-day chart. Of course, we saw it cross over going up in the afternoon. Price still below that 2-day and below the weekly. So we'll continue to keep our eye on gold. I want gold to keep going. I want to see the 4-hour now that it's the half-day now that it's crossed over. I want to see that 2-day crossover, and I want to see that weekly, and I want to ride gold up. But it's not happening yet. And we already told you about what's happening with Bitcoin. I hope you are learning to track and practice trade these charts. Please follow all 4 of them, plus Bitcoin if you're interested in Bitcoin. Practice, practice, practice. The more you practice, the better you'll get if you want to supercharge your trading. What do? Fill out your trade worksheet every time you do a trade. Your daily market worksheet as you listen to the show every day. And your weekly market worksheet. You might be saying, Tom, what are these worksheets? They're in your show notes every day. If you're a subscriber, you get them every single day for free. The PDFs are right there. You can print them out. We also have a 3-month version that is spiral bound that you can buy. But you don't have to buy it to start with. Just print them out. And we have great trainings on how to print them out. So I want you to have all of that stuff. It's all available. God bless, my friends, and it's all available for free. All the best from the whole team at Charting Wealth World Headquarters.